Check 1 2 1 2. Check 1 2 1 2. It is I, the Savage of Wall Street, once again. Let's see. Let's see. Let's get serious over here. Back at it once again, my friends, my fellow simpletons and degenerates. Um, I figured that I'll go live once again today because I see a lot of things that are just red flags all over the place. I do feel we are about to hit a nice little, um, some call it a recession. I call it a correction. I don't know if we're going to hit recession numbers, but I do feel we're coming up on a correction. I've been beating these drums, for a few now, and it's just we're absolutely frothy in the stock market, right? And it's about time that I kind of warn my viewers what what's kind of going to happen, or what we're preparing for. Nothing is 100%, obviously, right? But it's always good to know, or to be prepared for such cases. I am actually right now trying to get on the Discord and pop this over this live so that maybe a couple of people that are on the Discord, if they want to come through and have a look see, they absolutely can. Nice little day in the stock market. We kind of started off popping, then we got hit, and then we kind of started recovering, towards the end of the day. However, a lot of the stocks, for the most part, ended up in the red. Um, I like SoFi's resilience. I'll say that that's one of our Savage 20 stocks, and C3.ai battling. Unity's been showing a lot of life, which I love. Unity's definitely going against the grain and hitting 52-week highs. RXRX trying to recover. We got Archer. GME is going to have earnings next week, so we got to get ready for that. What do we talk about, right? Welcome to my channel. I am the Savage of Wall Street. Once again, I'm live, seeing that there's a lot of hoopla. I'm watching a lot of the pundits on on TV, going over how you're not supposed to trade if you are somebody that it's not didn't go to school to trade, right? If you didn't go to business school, you have no business trading your portfolio and taking matters into your own hands, making money. You should pay someone else to to do the dirty job for you, so to speak, right? I cringe whenever I hear Jim Cramer, this clown, who has been absolutely wrong about everything. Let's just get it out of the way. Tell people that retail investors should not be trading. You guys should be just buying and holding for dear life, and then being at the mercy of whatever the stock market wants to do. Right? I think that's atrocious. I think that if you are somebody that has a vested interest in your future, and most people are having a vested interest in their future, you may want to take it into your own hands to kind of do your own trading, right? Nobody has um, more of um, an interest in your future more than yourself, right? So the best interest at heart that you're going to have are going to be the best for you, basically. And so don't be afraid to take your future into your own hands and do your own trading. You know. Anyhow, I just find it amusing whenever I hear Jim Cramer, who's one of the most notorious shorters on Wall Street, um, telling people that they should not be telling people that they should not be trading. I think it's ridiculous and laughable. Anyways, who do we have here? We have Hector. Hector's in the house saying good day, Hector. How are you, man? Good to seeing you. F Gom is in the house saying hi. What is up, my dude? I hope you're doing well. Yeah, it's Friday afternoon. Most people are kind of going home after a hard day of work, and some people are getting ready for the weekend. And I figure I just make a video because look, there's 20 stocks that I really have my eye on, right? It's 20 stocks that I am going to be trading like crazy during this coming up hiccup, right? market correction, and I feel like, the red flags are there, man. Everything is telling us that the red flags are there. um Mr. Jerome Powell is probably going to cut rates, but I just don't think that that's going to be enough to prop up the market, right? I mean, we already have companies talking about they're going to buy back stock, and they're going to use billions and billions of dollars to buy back stock. And I don't think the company that is doing well is buying their own stock. It's just, that's not what happens. It's just a synthetic way to keep and prop up your company, and I don't think that's necessarily fair to the shareholders, because it's not real. It's not like they're going out and then making this money happen, right? They're not rendering a service and getting paid for it. It's just money that they had in their coffers that's been sitting, making interest, and gaining interest, and then they're going to take that money and buy out in the market, some stock from their own company. It's just not. It's not real. They're going to just basically, on days that is slow and the stock keeps, getting hit, they're just going to kind of, buy shares here, shares there, and kind of keep the stock balanced, so to speak. And it's just not, it's not the real market, right? It's not free enterprise. It's just fugazi. But anyway, so there's 20 companies that I think are just ripe to take off during this nice little correction I think we're going to hit. I have been saying that, we are entering a bearish market. We've been kind of frothy, and we've been on a bull run for a while now. And I just think at this point, when companies are starting to talk about forward guidance, is how now they're lowering their forward guidance. A lot of them are talking about buying back stock, like I said. A lot of them are basically saying that they're downscaling, they're laying people off. You have unemployment at a 5-year high. Unemployment is higher now than during the pandemic, which is insane. And then people just can't find jobs, right? Jobs are not being created. I think we created, 22,000 jobs in the last month, which is atrocious, because the stock market is at all-time highs almost, right? All these companies like Google, Nvidia, Amazon, they're near 52-week highs. I mean, record-breaking, right? And so, I mean, why is that not translating to everyday people, right? Why is it that, people are looking for jobs? I think the 27-week mark, that's kind of like a benchmark that the unemployment offices use. It's extremely high, and it's almost at recession levels, right? It's people that have been out of work for 6 months or more. Those are pretty high right now. And so, we're about to hit a nice little hiccup. How long is it going to take? How long before we get there? If I knew that, I absolutely would not be here. I would be hedging that position and making billions and billions of dollars sitting in a Greek island somewhere, or like somewhere in Ibiza, just, kind of going like this to my hands, getting ready to make billions and billions of dollars. But that's not it. I don't know when that's going to happen. I just know that, if you prepare for it, it's coming. It's not going to take that long, and when the shoe drops, it's going to drop, and the downward pressure is going to be violent. So anyways, there are 20 stocks, the Savage 20, that I kind of been, I'm kind of pounding the table on, because I think they're good positions where you can start a position at. And some of them are, they should be somewhere else. Let's just say that. These stocks have actually, some of them have been around for a while, and I've been talking about them for a while. Some of them I may have talked sporadically about on the channel, and some of them you may be have never heard me talk about. However, my Savage 20 will start off with a fan favorite, and it's SoFi Technologies. At this moment, SoFi is trading at 25.32, right? And it was at $4 at a time a couple of years back. I was pounding the table when it was $5, $6, $7, $8, and telling people you should buy this. People didn't listen. Some people decided to listen, and right now it's sitting at $25. Right? We hit 52-week highs not too long ago. Where it's going from here, it's really hard to tell. They keep killing all metrics, right? They keep crushing every single quarter earnings, and they just keep, slowly but surely, inching upwards. SoFi will be $100 a share in the future. We don't know when, but if you would like to start a position on SoFi, you would not be wrong to do so. I would say today would have been a good day when it was $24.24, 24.20. It was basically down 5% almost, and you would have not done a terrible job if you would have gone out to January 2027 and sold a cash secure put on it. Say a $25 cash secure put, and you could have brought in $6.20. At a high, you could have brought in $6.50. That is not a bad position to be in. Basically, January 15, 2027, you could either buy SoFi at $25. If it's sitting at $24.99 or less, you get those shares put in your portfolio, and you can start a position in a really good company. It probably is not going to be there. I think SoFi in 2027, in January, probably be closer to $50 a share, which means what? Which means that you're pretty much, instead of putting your money in the bank, you're putting it on the hedge that if SoFi does happen, if we enter like a pretty bearish scenario in the market, and for like a year and a half, we're just pretty much trending even keeled, and we're like either kind of not growing at all, and we're just sideways, or we kind of take a downturn of 10-15%, 20%, you're nicely covered. You can basically buy SoFi at around, I don't know, 1850, and that is not a bad position to be in, to start off whenever we do decide to like get out of the bearish market, or we're hitting an upwards trend, right? You could take a position on SoFi at a nice price point. Cash secure puts are actually the way that I like to take positions into a lot of companies, especially when I believe that they have a little more room to the downside, right? Or to just make free money, because I refuse to pay, unless it's like some ridiculous event where the company gets hit 15-20% on a day for whatever reasons, if the metrics haven't changed, if the underlying still has good metrics, when it comes to just keeping the same core fundamentals, then I just see no point in selling. I mean, it's just, that the reason why I invest is so that I can keep stock for at least 5 years or more. And I don't do the FUD, right? If there's some type of hit piece written on a company, or somebody sues the company, I don't care, because there's always going to be those lawyers that are going to sue for whatever reasons. They're just trying to make some money or a name for themselves. And unless there's some ridiculous change in the fundamentals, I see no reason to take an approach where you just take off with your money, unless it's a position where you see that the stock is not moving at all, it's not creating you any money. Cash secure put wise, is just dormant, and you keep on trying to get it at a specific price, it's just not happening, right? And you keep it keep going down, and even though you were averaged down a bit already, it's just not happening. It's okay to then take your money and say, I'd like to just take another approach with this money and put it elsewhere where I'm going to be reaping more of a benefit than now, right? So anyways, SoFi Technologies, number one of the Savage 20, and great position to start right now. Cash secure puts, $25 cash secure puts out to June 2026 or January 2027, a great place to be. Sentinel One I've been talking about, for a little over a year now. I honestly think they're the next CrowdStrike. They do a lot of the same things that CrowdStrike does, and for cheaper, right? They have actually, I think they're better. Well, I think they're better ran. I think that their board is better. I think that they are newer and they haven't been around as long, but they haven't gotten hacked. CrowdStrike has. So being so that they're worth in cyber, they both are in cybersecurity. It's kind of like you know, going and getting like an In-N-Out burger and it's getting sold for $10, you know, and then elsewhere somebody's selling the same burger for, you know, $4. Like, why would you pay $10 when you could get the same item? And they haven't been hit with, like, you know, penalties from the what is that department that looks for cleanliness and hygiene, in the health department at cities, right? The health. Let's say that the health department came in, where, you know, the burgers are $10 and they've already given them, you know, a couple of infractions. Well, this other place is cleaner and they haven't gotten hit yet. So like that would be a better choice, I believe. Sentinel One is trading at 1862. You would not be terrible if you. It would not be a terrible place. Basically, a terrible trade if you sold an $18 cash secure put on a Sentinel One expiring December, and you brought in $135. It's trading on the bid at 130, on the ask at 140. If you traded at 135, you said for $135, I'm willing to buy Sentinel One for $18. It's sitting at 1862, so it still has to come down 62 cents, right? And so if it does, and in December, you know, for whatever reasons, under $18, guess what? They're going to put 100 shares in your account. Realistically are buying it for around 1650 because you're getting paid to buy the stock, right? So it would not be a terrible position to be in. Sentinel One is another of the Savage 20, and I have a very good feel about this stock. They have very good metrics. They keep crushing earnings. And at this point, it's just it's a matter of time. You know, they're going to be $50 a share. It's just going to take some time. When that time is, I don't know. Just like I was telling people, you know, SoFi is a $50, $100 stock. It's just not yet. It's going to take time. I don't know when that time is, but if you were to take a position on Sentinel One right now, and you did it through a cash secure put, even October, right? Get paid over $1 to enter a position. An $18 position would not be terrible at all. The next one, Navitas Semiconductor, right? They have an NVIDIA contract. They have a couple of other contracts that are really, really good with some good clients. It's the ticker is NVTS, and so it's trading at 555 at this moment in time. If you were to trade Navitas, let's say, and you went on to sell some cash secure puts, some 550s, it's trading at 55. You know, say some five, so you can get it for under $4, right? Or under $5. $65 or 65-cent cash secure puts, you know, per share would not be terrible. If you went to 12.19 and you sold some $5 cash secure puts expiring December, and you asked for 65 cents, that means $65 for a 100 share contract. You would not be wrong to do that. It would be actually a good move. So NVTS, a good position to be in, to buy it under $5 and taking, you know, a position on it. It's I think in the future it's going to make a lot of money, you know. So right now we just got to navigate the market and see what's paying, right? UiPath, another company that I've been talking about for like over a year, and it's one of those that is just it's an option rider's dream, because it stays in this channel between, you know, $11 and like $14-13, right? And it just keeps going from 11 to 13 and back down, and so back down. So I keep selling the same, you know, $13, $14 covered calls, bringing in premium, and then buying it back for like a fraction of what I sold it, and I keep it doing every 2 months, every 3 months. I keep bringing in more premium. UiPath, 11.42 a share. They just had earnings. They crushed all metrics. They're doing a great job. It's just a matter of the street finding out about them. Um, the people that know actually have a position on UiPath. I think Kathy Wood bought like a few million shares. And I have some shares, as well as I have some $11 cash secure puts expiring September 19th. I got a little over $90 for those, and right now they're at 17 cents. I'm not even buying them back. I am daring the market to put those shares in my account because I want more. You know, what do we got here? CKT's in the house saying Savage Live Friday evening when I'm going to pick up my kid from practice. All right, all right, all right. That's what's up. My daughter had practice yesterday, and actually she had one of the best practices that I've seen her had, actually, like ever. Yesterday, she was just she was locked in, and she was just killing it. I think she scored a few goals, and she missed a few that were very, very close, but she was just taking every shot, and she was on it, man. She's usually a defender, which is, she's getting more comfortable in the forward position, and I think that's great. So, anyways, if you're at your kids' practice listening to me, Jap, I think thank you for listening, man. So UiPath, another one. Figma. Figma, it's a really good company. I do know it because I've actually been to a couple events that they hold. They did IPO not too long ago, and I think some people actually bought them in the $100 range. I think in the $90, $100 range. I think they overpaid. It should be closer to $40 a share. It's 54.46 at this point. I'm waiting on it to get to the 40s. If it gets down to 45, and I think in a little nice downturn, it'll probably come back down to closer to that. Uh, if it comes down to like the $40 land, let's say 45, $40, I'd love to sell some $40 cash secure puts on it and bring in $5, $6 a share, so that I can buy it for like 35, $34. I think that's kind of like what I'm waiting on. But keep an eye on it. That's a Savage stock. It's a really good company, well ran. It's executing and firing on all cylinders. It's just they had I think people were expecting too much from it, right? And I think that it's unfair to expect a company that just IPO'd to absolutely crush the metrics that somebody has put on them that are not necessarily like that are just way overshot, way overinflated. It's just it's good. It's the company's gonna be. I mean, it's gonna be worth $100 a share, but just not yet. It's not worth that right now. Closer in the 30s and 40s. But if it does come down to the 40s, I'm really gonna start looking at some cash secure puts on Figma, man. I was thinking 50s, but now that I just everything that's happening in the world, everything that we're getting out of the Fed, it's just we're gonna lower rates, but I think that's gonna be kind of everyone's cue that we've hit a recession, right? And they call him too late Jerome Powell for a reason, right? And it's not him. It's just that's what the Fed does. They actually they come in kind of when all these metrics are met, and then they cut rates. But that point is kind of too late. So like the economy tanks a bit, and then we have to go through the pains, right? And then it recovers, and then unemployment starts, kind of going lower, and the economy becomes a little healthier. But I mean, it's got to happen, right? A nice downturn, a good correction, now and again, it's actually a healthy thing for the stock market. I don't think Nvidia should be at $180, $190 a share. I don't think Palantir should be at $190, $200 a share. That's insane. When you have a company trading at like 600 times earnings, that just makes no sense to me. 20 times earnings is healthy. 15, 20, very healthy. It should be closer to 10, really, but I mean, we're talking about tech. So I can see, 15, 20 times earnings, but like 500, 600, 700, that just makes no sense. It makes absolutely no sense. All right. SMR. I don't know if I've talked about SMR. It's one that I've been watching, and I took a nice little position um, when it was closer to like $10, $15 a share. But there's so many stocks that I talk about. In fairness, I don't want to just talk about every single stock that I'm looking at, because I don't want people to trade every single stock I trade, right? But I do look at stocks that are healthily creeping up, and then that I see a future, and that I see that people will be comfortable trading. They're not high risk. They're companies that I see around in the next 5 years, and I think I'm not a financial advisor. I'm not trying to give anyone financial advice, but just information, right? And in my opinion, and I think New Scale Power, it's a legit company, man. um they've dipped, a little bit after the SMR deal excitement and mixed earnings results, right? Because I remember it's one of those where you uh, buy the rumor, sell the news type of thing. I think people, got overexcited about something, and then the deal happened, and then now the price is starting to come down to reality. But right now would not be a terrible time to enter a position. You know, I think if you sold a January cash secure put on it, and you sold a $30 cash secure put, the stock is sitting at $35 a share. You sold a $30 cash secure put and brought in $470. That's $470 a share. It would be nothing wrong with that. I see nothing wrong with that at all. You're essentially buying the stock for 25 30, right? Um, I see nothing wrong with that at all. Taking a nice position in a good company, and then seeing how it moves, right? You can start putting it on your watch list now, see how it moves, and see if it's kind of like your cup of tea, and if it's something that you're kind of excited on, and it's a company that of the type that you've been looking at, look at how it moves and see if you want to take a position. It provides proprietary and innovative, advanced small modular reactor nuclear technology. So they're an energy company, um, with a mission to help power the global energy transition by delivering safe, scalable, and reliable carbon-free energy. Its products include Voyager SMR plants and energy exploration E2 centers. The company was founded, headquartered in Corvallis, Oregon, in 2007. It was founded. So good company. They've been around for a few years, and the street is kind of starting to find out about them. Um, I think energy is going to be, one of those unicorns, right? Everyone's looking for the next thing. Gas, it's kind of played out at this point. You can see it by just how many electric vehicles there's on the road, and I think these guys are onto something, right? I think that there's absolutely nothing wrong with getting paid to take a nice little chance on a company that you may see a future in. Let's see here, QBTS. Quantum computing is the next big thing, right? AI, everybody's finding out about it, everybody's excited about it, but I mean, it's here, and it's just a matter of time, right? But quantum computing, it's in its infancy. I think that's going to be the next big thing. Just like AI was, I took a position in, C3.ai and Palantir when these companies were like $10, $8 a share, and then they ran up. I took some money off the table, sold some cover calls, and I did well. However, the next thing is quantum computing, and I think QBTS is a good company to look at. Um, it's 15.34 a share at this point, right? And if you were to take a position on it, wait for a red day, right? And let's look at some October 17th, $15 cash secure puts. Try to get $1.75, $2 for them. Nothing wrong with that at all. You want to get a little more money for your troubles? Look at the $15 cash secure puts and try to bring in $3 for those. Basically you're getting paid 20% to take a position in a company that's probably at the it's going to be at the cutting edge of the quantum computing frontier, and I think they're going to be around for a while. So you're buying for $12 a share. Nothing wrong with that at all. Let's see here. Another company, with the Savage 20 RXRX. People have probably that watch me regularly know that RXRX is a favorite of mine. Um, Great computer. I'm sorry, great company. Um, they hold a lot of patents. They have contracts with some really heavy hitters, and Bayer, Merck, being some of them, and the money it's in the royalties for them. You guys can do your own due diligence, right? It's heavily shorted at this point. There's not many shares in existence, and there's a low float. The potential for a short squeeze is that of Open Door Technologies for this one. Actually, probably there's less shares than Open Door, but but it's there. And once the shorts get caught with their pants down, it's going to be insane. So again, um, RXRX Recursion Pharmaceuticals, great company. It's got an exemplary helm manager as a CEO. Um, they're serious about what they do. They actually making money now, and they're heavily shorted. I think that for whatever reasons, Wall Street thinks that they're going to try to bankrupt them. I don't think they will. There's too much money involved here. I think Bayer and Merck are not going to like it. I think they're going to dump as much money as they can into RXRX, and the shorts are going to get caught with their pants down. RXRX is going to go to $10 a share quickly, very quickly, and taking a position now in the fours, it's insane. I mean, it's almost at 52-week lows. That's kind of when I love to go into a company that I'm looking at, especially if it's got good metrics, and it's got a good board. They got good fundamentals, and they're just they just been hit for whatever reasons, right? Um, Very undervalued. And if you were to do a cash secure put on RXRX, I think a January $5 cash secure put would not be a terrible thing to buy or to sell at $120 a share. Basic. I'm sorry, $120 per contract, $1.20 per share. Basically, you're saying here I'm going to buy RXRX on January, um, in January, and I'm going to buy them at $5. Give me $120 for that, right? So here's $500. Let me get 120 back. You're essentially buying for 380, right? You think that's too expensive, or you would like to get it cheaper? Go to $4. $4 cash secure put is giving you $60 right now, 60 cents per share. So you put away $40, they'll give you, pretty much 15% back for your troubles. Nothing wrong with that at all. Um, I like the company. I like the stock, and it's been making me money for a while. I keep waiting for it to pop. When it pops, I sell some 750 covered calls, buy them back. It pops above $7-8. I sell $10 covered calls. I buy them back whenever it scales back down. It's just shorted, but eventually the shorts are going to get caught with their pants down. It's going to be something to behold. And you think what's happening with Open Door Technologies is fun. Wait till RXRX really blows it out of the water, man. They're one new cycle away from going to $20 a share, and that is going to be crazy. So, anyways, I have some cash secure puts that are expiring September 19th, October, and November, and some in January, and I can't wait to get those shares. Um, C3.ai is the next company of the Savage 20. I am very excited that C3.ai is back in the $14-15 land because I am just gobbling it up. It's a $100 stock. It's a $100 stock for whatever reasons. I mean, I know the reasons. It's just the CEO. It's actually diseased. He's losing his sight, and he's one of those people that likes to control every single part of the company, right? And it kind of micromanages at a point. This is good when the guys are like, when the CEO is like, it's like Elon Musk, right? They're everywhere. And when you're healthy, you're firing on all cylinders. It's a joy to watch these guys work. They work 20 hours a day, and they just don't take a rest. And there's a reason they get paid so much. But Siebel is actually in the decline. He's in the 70s, and he's got a lot of medical issues. And I mean, losing your sight, right? That's a big deal. He's going to stay as chairman, but the guy that he's picked to come in as a CEO is actually a good guy. I've been reading up on him. The guy's Stanford MBA. He has good connections to with Salesforce. He actually started his own AI companies and sold them, and then he went and worked for the government, and he's coming back. And he's got connections all over Silicon Valley. So I'm very excited to see what C3.ai has in the future. At this point, obviously people, and when I say people, I mean the investors, right? Shareholders, they're nervous, of course, because they go from a guy that was one of the top CEOs and that has a history to a guy that they don't know much about. But the guy's actually the guy's pretty good. I'm gonna give it 6 months, 9 months to see what he does to turn around the company. But my taking a position in the $15 land is not terrible. Um, Sell some January cash secured puts, some $15 cash secured puts get paid. I would ask for $1.95, $2 a share. Essentially, you're buying at 13. That's not terrible at all, man. You're taking a position at $13 a share, pretty much. And worst case scenario, you get 100 shares of C3.ai. I personally think that you're going to be getting your $1,500 back in January, and you're going to be able to keep these $200. Nothing wrong with that at all, man. It's just if you're looking for an AI play, an alternate to Palantir, this will be it. This company actually has taken contracts away from Palantir in the past. There's a reason. They're good. It's just that right now there's just too many things going against this company. They've actually missed, this last quarter. Everybody knew that all these companies are going to have lower guidance and they're going to miss. But it's just because everything is compounded for C3.ai right now. It's just a shitstorm, right? But if they end up, in fact, coming out of this one, and I think that they will, I think they're going to go back to $25, $30 a share. Obviously, I don't know when that's going to happen, right? But I'm putting my money where my mouth is, and I have a lot of shares. I haven't even sold covered calls on these yet because I'm waiting for a day that it pops 10% or more. That's when I like to sell my covered calls. I think that that's when the premiums are at best, and I can take bigger chunks because I sell covered calls 2-3 months out so that I can take a nice chunk back with me in case I get taken out. Oh well, at least I got a big chunk out of it. And if not, then in this in the stock drops for whatever reasons, I can get more money, and that's kind of the way that I kind of hedge and protect myself, right? C3.ai, I think, is here to stay. Whether you want to take a gander, right? If you want to take a position on it or not, that is all up to you. But I think it's a very well positioned company to take over in the next few years. It's just had a shitload of bad luck this year, but these too shall pass, my friends. SMCI, Supermicro Computer. I mean, these guys just cannot build those data centers fast enough, man. These guys, they're making a lot of money. It's just, I think that the CEO should just pull the plug on a lot of people that are not working, I think, as efficient as they should. But it's a great company, man. It's just when it flies, it's heavily shorted as well. And when it flies, it is going to go to $100 a share, $80 to $100 a share easily. It's sitting at 40.19. I think that if you would like to take a stab at it, it was $26, $25 a few months back. It went up to like 50, came back down. I sold some covered calls out to 2027, some 45s and 50s, and I took in a chunk of change. I think I sold some contracts for $18, some others for $16, but they're a lot less now, and I'm just gonna wait because I do think we have a little correction coming up. I don't know if the stock is going to move that much. I think it's kind of where it likes to be. It likes 40, but if it was to go down a little more, I see nothing wrong with selling some January cash secured puts, and I like the $38 cash secured puts. It's at 40.27 right now. You could sell some $37, $38 cash secured puts and try to bring in, four 25, 450 for them. That would not be a terrible position to start in. Worst case scenario, like I said, you get put those shares, but it's a great company, and eventually it's going to be $100 a share. It's a matter of time when, right? I don't know when that's going to be, but it's a very well-run company. It's just that right now, I think that they could work a little harder on some things and build these data centers faster. But you can only do what you can do, right? So, really good company to keep an eye on. SMCI, Super Microcomputer, and they're the only ones doing this, man. So it's just $38 cash you put out to January. Not a terrible way to start a position. Um, ASTS Space Mobile. This company is going to be $100 a share as well, if not more. It's just going to take time, but right now it's just I'm very. This is one of the companies that I have cash secure puts on up to like June next year, March, and I'm just licking my chops and waiting for them to put those shares in my account. I wrote some 50s and I got over $15 for them. Um, Take me out. Take me out. Basically, my break even price is going to be $35. The stock is at 42.59 right now. I mean, take me out. I was trading this company when it was 20, 25. It's just a moneymaker at this point. And cash secure puts is the way to go, at least with me. You could just buy the shares, I guess, at 20, but like I said, I like to take a position by doing cash secure puts, and eventually I get put those shares, and then I do cover calls. ASTS, great company that I think people should have a look see at, and I think it's a company that's going to be making a lot of money in the years to come, and a good company to have during a nice little recession. I think it's recession proof, and there's a reason I'm telling you guys about these companies now. So just keep an eye out on them. You don't have to take a position either. Just keep an eye out on them and see how they move, and see if that's kind of the type of party you like to be in, right? And if you decide to take a position, there's nothing wrong with going through a cash secure put and trying to get it as cheap as possible. There's nothing wrong with that at all. Nvidia. So yes, Nvidia is it's one of the 20 savage stocks, and it's overvalued. Yes, it's overvalued, but they are the only ones working on these fucking chips, right? And then they can make them fast enough. I like them at 130. Talk to me when Nvidia is 130. I actually have some $100 cash secure puts in them. I have some 120s. And I'm just waiting. I'm just crossing my arms, hoping that they fill. I got a nice chunk of change for those. And at this point, I also have covered calls. I have some 175s and 170s out to 2027. And I'm waiting. Got a nice chunk of change for those as well. And so I'm trying to choke it between 175 and 130. That's the window that I'm looking at. Now, could it go higher than that? Of course. I think that some people are willing to pay a premium for Nvidia at this point, but I don't want to pay that premium, right? I think that the a fair market value for Nvidia right now is like 125. I think that's the fair market value, which before the split it would be like $1,250, right, a share, which is fucking insane. But that's a fair market value, at least my assessment, my opinion, right? Don't be scared though. This is a company that will be $200, $300, $400 a share. It's just going to take time. So don't be afraid to take a position on Nvidia and try to write some June 2026 cash secure puts. And let's say we see 150. Let's say we see 150 for a day, right? Let's say 145, 150. Don't be afraid to sell, 140s. 140s, 135s, and try to bring in over $1,000, per contract. You go and write some June 18th, 2026 cash secure puts on Nvidia, 140s. You could bring in well over $1,000 at this point in time, right now, right now. So not a terrible deal, man. That's not a terrible deal. If any, worst case scenario, you got Nvidia at 130. Worst case scenario. Um, Base case scenario, you get $1,000 for putting $14,000 away. No bank is gonna give you that, right? So wait for Nvidia to drop. It's dropped since it was like a 183 not too long ago, right? It's 166. I'm looking at it to break. If it cannot hold 150, it'll go down to 155, 150. If it cannot hold 150 for like a week, it's going to the 140s. And I think then will be a great time to go in with some cash here puts and try to bring in $12, $13 for the 135s, 140s. I think that would be a better deal. $15 for the 140s. Yeah. Yeah. That is not terrible at all. $12, $13 for the 135s. Yeah, absolutely. You go to June 2026, go to January 2027, bring in even more money. Nothing wrong with that at all. It's just I don't think it's worth 166 right now. Personal opinion, of course, right? But I was pounding the table when it went down to 90 and 100, and I was telling people, please do cash secure puts at 90. Cash secure puts at 90, 2027. Do it. Bring in a lot of cash, free money. And the videos are here. All you have to do is go back on my videos and then see what I was talking about. I'm not trying to BS. Another company, GME. Yes, love my GME. I am actually, I just, I am. I'm not waiting for that short squeeze, man. I'm writing covered calls, $23 covered calls expiring September 19th. I got over $2 for those, and at this point, I'm doing the cash secure puts as well, and so I'm doing $22 and $23 cash secure puts expiring October and September, and that's what I'm gonna keep doing. I'm gonna keep choking it between $22 and $23 every month, and either get assigned or get my money back. Get assigned or get my shares back. That's all I'm doing, and I don't care if there's gonna be earnings. I don't care. I'm gonna do what I do, which is keep it moving, keep making money, and then daring the market to put those shares to me or giving my collateral back, which is my money. So take me out, baby. GME, I'm not waiting on it. I've already made money on it, and at this point, bears make money, bulls make money, pigs get slaughtered. I'm just gonna stop, oinking around. What do we got here? We got Mr. Lucky Go Round saying Savage, holding 3,000 shares of Open Door Technologies. Yes, sir. That's how you do it, my friend. I hope you're selling covered calls right now and making some money, because quite honestly, you should be selling some covered calls and trying to, protect yourself from it getting hit, and it going back to $4 a share, in which case you could make a killing, because you can then buy those covered calls for 40% less. You don't have to wait till the expiry, and then just wait for it to pop again and sell the covered calls again. And that's how you play that game, my friend. And I think you're doing well. 3,000 shares is A-okay with me, my man. Yes, sir. Next, Savage stock of the Savage 20s Nano Dimension, tickers NNDM. It engages in the provision of intelligent machines for fabrication of additively manufactured electronics. Its products include Dragonfly IV, AME Materials, Fabrica 2.0, and Fabrica Micro M Materials. Founded 2012 in Nes Zayona, Hadaram. It's traded between 131 and 274 this year, and it's just one news cycle away from it going 5 to 6,000 a share. It's close to the 52-week low, which is why I'm letting you guys know of it. You don't have to buy it; just keep an eye on it. And if you want to buy 100 shares at some point because you have an extra $100, nothing wrong with that at all, right? NNDM, Nano Dimension. Keep an eye on it. It's a 136 stock right now. Could be $5, $6 a share soon. So just letting you guys know it's out there, and don't be afraid, to take a little plunge on a day that it goes and moves down a little bit. Um, you could even sell a cash secure put on it. You could sell at 150 and try to get paid, 25 cents for the 150, so you could essentially buy it for 125. I mean, I don't know. It's just, I quite honestly, it's so damn cheap that you just buy the damn stock. Just buy the damn stock, and then you'll have 100 shares of Dino Dimension, and hold on to it, and don't trade it until it goes to $4 or $5 a share. AEHR. It's a test system that engages in the design, manufacture, market, and sale of test burning equipment used in the semiconductor industry, and so it's trading at $25, 25.42 a share. 52-week low was $6.27. 52-week high $27. Now, I'm not telling you guys to buy it. I'm just telling you guys to keep an eye on it. Wait for it to get into the 20s, right? In the $20, $19, $18 land, and then you can sell some, $15 cash secure puts, and try to bring in a nice chunk of change, because I think the premiums are going to be good. It's one to keep an eye on, again, right? And see what happens. Just keep an eye on it. Keep an eye on it. It's not a terrible company. It's just it's something to keep an eye on. It's got juicy premiums, right? Do your due diligence and see if it's something to your liking. Origin Materials, ORGN. This is kind of like Nano Dimensions. It's a company that is 52 cents a share right now. Right? It's extremely cheap. Its low was 40 cents a share for the year, 52-week low. But right now, it's 52 cents a share. You have $52, buy 100 shares. Keep them in your pocket, see what happens, right? They're a carbon negative material company which engages in the provision or providing sustainable materials by replacing petroleum-based materials with decarbonized materials. The firm is using platform technology, converts sustainable feedstock, such as sustainably harvested wood, agricultural waste, wood waste, and even corrugated cardboard into materials and products that are from fossil feedstock, such as petroleum and natural gas. Its products include food and beverage packaging, clothing, textiles, plastics, car plants, carpeting, tires, adhesives, and soil amendments. They're all over the place. They are a cheaper alternate to cardboard, and other materials. And I think companies are going to look to cut costs, and this is one of the companies that are looking to help you cut costs, right? And so 52 cents a share is where it's at right now. You got $52. Yeah, see what happens. I'm not telling you to go and trade it right away. I'm just saying, I was telling people to buy Open Door Technologies when it was 60, 70 cents, and I was like, don't trade it. Just give it a minute. It's going to be $4 or $5 a share. If it gets to $4 a share, it'll get to 5.6. If it gets to 5.6, it's going to go to 8. It's going to go to 8 now. And if it goes to 8, it's going to go to 10. Just give it a minute. It's going to go to 10 cents. It's going to go to $10 a share. Just got to give it a minute. Wait until the rate cuts happen. Open Door Technology is a real estate play. Wait till that happens. See what happens. It's going to be something else. Again, ORGN, Origin Materials, 52 cents a share. Keep an eye. I told you guys about IonQ. IonQ is my baby. I've been trading it for a while. December 19th, cash secure puts. The $35 cash secure put will bring you $33 right now, or sorry, $3.35. Wait for it to dip a little more into like the 40s on the day when it loses 5% or more. These 35s will probably be closer to $5. I think that'll be a better bet. Starting a position as a 35 put and bringing in $5 per share. So basically, essentially, you're buying at $30 a share. Not terrible at all. And I think it's if anything, you can keep an eye on IonQ. That's IONQ, which is the ticker, and see if it's to your liking. It's one of the top 20 Savage stocks. What else do we got here? Holding 3,000 shares of Open says Mr. Lucky. Yes, sir. I saw that. Misty Tree Woodcraft saying, "Ahoy, Lucky 10." Misty Tree Woodcraft's $29 cost basis on my assigned C3 to AI. Don't be afraid. I think those were high. You probably got a 35s, right? Look, $15 cash secure puts out to January right now could bring you in a couple of dollars. Nothing wrong with that at all. Do 3 or 4 of those, average down on your 29s, and then when you average down, it'll be more palatable. And then when it hits a 5-10% run, which it will, then you can sell some covered calls, and instead of selling the one that's $29 cost basis, cost basis would be closer to probably $20, right? $21, in which case you could sell 21s or $22 covered calls out to a few months and bring in $1 or $2. Not the most terrible thing, right? So they were 40s. Oh, you went high, bro. Or I would have told you those were really high, because the 52-week high was in the 40s. Yeah, no. See, I don't recommend people going in at 52-week highs with cash secure puts. Remember, I'm not telling you what to do, right? But like when I go in, like I salivate at the 52-week lows. That is my thing. When the company's at a 52-week low is when I go in with cash secure puts, and I try to go even one strike zone below that so that I can get it even cheaper. So that's kind of a company's close to 52-week lows. That's kind of they're right for cash secure puts. You went in high, man. Yeah, and I can tell you got them last January. You were really like, you were in the AI hype like everybody else, man. I get it. But hey, everybody's new. Right now, January cash secure puts $15. Average down. Nothing wrong with that at all. I'm not telling you what to do with your money. I'm saying I would average down, right? And there's nothing wrong with that at all. You essentially, your cost basis, if you get assigned those shares, it's like $12. It'll be like $12 something. So that's 300 shares. Let's say at $12, right? That's $36, and then you add the $29, and then 36 with 29. That's what 56 and 9 65 divided by 4, right? 65 divided by 4 is actually less than 20. Let's see here. Your cost basis would be closer to 1625. So yeah, what's wrong with that? I mean, that's crazy. I mean, that's a great average. At that point you can sell some 18, some 1750s, and bring in a couple of dollars. Not dude, that's all right. We've all been new, we all started somewhere, and this happens, man. It's all good. This is all experience. Look, time in the market is always going to outdo timing the market. Everybody tries to time the market. Everybody's trying to look for that edge, right? Like, oh my God, like this is happening. The RSI is here. The Bollinger's here. Look, it's oversold. It's overbought. And look at the 20 DMA. Look at the 50 DMA. Look at the 10 DMA. Look at the 200 DMA. It's like, it's just so much. Look at the metrics. Look at we have unemployment numbers coming in, PPI, CPI, blah blah blah, and it's just like, just look at what the stock is telling you. Look at what they're doing. Look at what the stock is telling you, and take a position. It's not rocket science, right? Like, I'm a dumbass and I'm doing it. So yeah. So yeah, man. 1625 a share if you do 3 cash secure puts. I mean, quite honestly, you're basically doing 3 cash secure puts with almost as much money as you did the one. So like, if not less. So like, that's not terrible at all, man. Yeah, don't be scared. Everybody messes up, dude. I don't beat yourself up over that. We all start somewhere. Next, Savage stock next of the Savage 20, Abcelera Biologics, ABCL. This is another one like RXRX, man. It's gonna when it flies, it's gonna fly, and it engages in the development of therapeutic antibodies. It offers antibody discovery platform that searches, decodes, and analyzes natural immune systems to find antibodies that can be developed to prevent and treat disease. Um, that's a mouthful. And I think that the 52-week low was 189, the 52-week high 582. It's sitting at 420. I say wait for it to get to like the under 4, and then you could do some January cash secure puts, and you could do some $4 cash secure puts and try to bring in $1. You're basically getting 25% right off the bat, and then you're buying it at $3. Not a terrible trade to make. And it's a company, like I said, it's doing good things. They're always working around the clock, and when it goes, it's going to go. So don't be afraid to take up. So keep it on your radar, if anything, guys. Keep it on your radar and see if it moves, the way you like it, and if it brings in the premiums you like, and if it's something that you can see yourself holding for 5 years. Ginkgo Bioworks. The ticker is DNA. It's Ginkgo Bioworks Holdings is a biotech company. Its platform enables biotech applications across diverse markets from food, agriculture, industrial chemicals, and pharmaceuticals. It operates through the cell engineering and biosecurity segments. The cell engineering segment consists of end-to-end cell engineering solutions and cell engineering tools offering for biological research and development. The biosecurity segment focuses on bio monitoring and bioinformatics support services offered to both government and non-government customers through the company's two core offerings, Canopy and Horizon. So their 52-week low is $5. 52-week high is 16. It's sitting at 11, so kind of in between. I say, it was down, almost 5% today. Today would have been a good day to go in with some with some January 19 cash secure puts, and selling some $10 cash secure puts would have brought you in 180. So getting 18% money back on your investment right off the bat. You could go to January and do the $10 cash secure puts, and then bring in 185. I honestly think that December one is probably better, because it's $5 is not that big of a difference. So going to December, $10 cash secure puts for 180, not a terrible thing. You could do the 10. You could do the $9 cash secure puts will bring you 118, or even the $8 ones that are bringing you 75 cents. But keep an eye on it. You don't have to take a position on it now. Keep an eye on it. See if it's something that you like. See if it moves. See if you like the premiums. See if it stays in this area for a couple of months, and you're like, you know what? I've seen how it moves. I'm familiar with this one. Let me start a position with 100 shares. Right? Let me do one cash secure put and see what's up. Nothing wrong with that at all. These are not like recommendations for you to buy. These are just, the Savage 20 are stocks that I have, a position in. I am vested on them. So interest of full disclosure, right? Like I'm trading them. So I obviously have a bias. So don't take my word for it. Do your due diligence and go in and see if it's a company. These are companies you may have not looked into, or they may already be on your radar. I don't know, but there's nothing wrong with always looking at some. There's tens of thousands of companies out there, right? Nothing wrong with having one that you could look at and be like, let me put that on my little cheat sheet here, right? Let me my little watch list and see what it does, how it moves. If it's something that I find attractive, if not, then you could just always take it off of your list and no big deal. Schrodinger is the last one. Well, actually, there's one more. SDGR. Schrodinger engages in the provision of chemical simulation software solutions to pharmaceutical industries. They're kind of like RXRX. They're like a two-headed monster, right? RXRX is kind of like an AI and pharmaceutical play. This is kind of like a software and chemical play. So they're kind of binding two sectors in one. These are the ones that really can RX. They can 100x easily. It's just there's catalysts that have to be involved, right? But make no mistake, RXRX could be $300-$400 a share at some point. It's just somebody put it out there, and I read it, and I was like, you know what? That makes a lot of sense. There's a reason I'm into RXRX. There's a reason I'm into Schrodinger. This one can 100x as well, but at this point in time, is 19.13 a share. Okay, it is where it is, and the 52-week low is 1660. 52-week high is 28. 47. It's closer to the 52-week low than it is the 52-week high, in which case, on a down day, when it hits, it gets 5% down, maybe 10% down on a day. Go in with some cash secured puts. Look at the 1750s. Try to bring in 250 for those. January 2027, January 2026, 1750 cash secured puts could bring you in $253 a share. Not terrible at all. Not terrible at all. Try to bring in, if you would like to go lower, $15 cash secure puts for over $1. Not terrible at all. Try to get 150 for those if they get down there. But 1750s would probably be a little more palatable and more likely, right, for you to get some shares. And it would be, you're in the $2, $250 land. Nothing wrong with that at all, my friends. Keep an eye out on that. So yeah, Schrodinger SDGR company that you could put on your watch list. And again, the last one of the Savage 20, Webull, ticker BULL. It's gonna be it's a direct competitor to Hood, right? Robin Hood. Hood was like $120 a share, way overvalued. And right now, if anything, I think it's taking a hit for a reason, right? It's under $100 a share now. But BULL, Webull is actually it's in the $12 to $13 land right now. Not a bad time to take a stab at it. And if you would like to take a position on Bull, I think if you did some 1250 cash secure puts, it's pretty much a moneymaker. Out to January 2027, try to bring in $240 for putting up $1,250, and basically getting the stock around $10 a share. If you put those shares, not terrible at all. Going out to July, selling some $15 cash secure puts and try to bring in $550. Not terrible at all either. That's 33% of your return on investment for less than 1 year of putting your money away. I don't see anything wrong with that. And you can dare the market to put those shares in your account. You're getting basically paid $550 to buy Webull at 15, which means you're literally getting it under $10. Nothing wrong with that at all, my friends. And it's like I said, a direct competitor to Robinhood. I like their platform. I like that they're making a lot of money, but they are also international. Once they grow internationally and they really, really, people really find out about them and that they're an alternate to Interactive Brokers, I think it's going to fly. It's $100 a share stock easily. Not at this moment, but it will get there. It's a matter of time, right? That kind of rounds our 20 companies. So Savage 20 that I'm looking at. These are the companies that I think during a minor pullback, a 10-15% pullback, that is a healthy thing. These are the companies that could be making you money, lots of money, for years to come. It's just all up to you and taking a position and seeing if this is kind of the type of companies that you're looking at. If not, that's okay. There's always Microsoft. There's always Google. There's always Amazon. There's always Meta, although I think it's ridiculously overvalued. There's always, Netflix, and so I mean, there's so many other companies out there, right? But like these are the ones that have been making me money, and I'd like to share them with the viewers and seeing, if you guys want to kind of either take a stab at them or just keep them on your watch list and see how they move. And at some point, if you take a position, let me know when you guys are watching me and say, "Hey, Savage, guess what, man? I did a cash put on, on RXRX or on Webull, and I brought in this much money, and I'm just gonna be like, dude, that's great. That's Or if you went overboard and you paid too much or too little, they pay you too little. I'll be like, dude, you could have you looked at this one too? You may want to hedge your position with this, but it's just there's so many ways to skin a cat, man. There's so many ways to skin a cat. At the end of the day, as long as you have a naked cat, that's what matters. Anyways, guys, I'm gonna hit the road. I'm gonna go downstairs and be a dad. My kids are out of school, and I made a nice lunch for them. They're probably eating away at this point, and I'm looking to have family movie night with them. So I'll be back Sunday night so we can talk about the happenings of what's happened during the weekend. A lot could happen during the weekend, and so that we can prepare for Monday, right? When I'm looking to go live at 8:30 a.m. But until then, you knuckleheads, thank you for watching. So my fellow simpletons and degenerates, thank you for watching. You guys have a great weekend. Go have some fun. Have a lot of beer. Eat some delicious food, and more importantly, share and spend the time with your significant others that you love, because that's at the end of the day what matters. And until Sunday night or Monday morning, if I don't see you on Sunday night, take care. God bless. Peace out, my friends.